Good evening, everyone, and welcome to our final for the year, Bullion Basics and Banter. We are back here tonight to talk everything to do with bullion. It's a hot topic at the moment. So much is happening in the space. We've got a wonderful panel assembled tonight to talk to us. We've got Katrina, who's here with me in Brisbane. We've got Drew, who's down in Melbourne, joining us, and we've got Cass Smith. Where are you joining us from this evening, Cass?
I'm in the Gold Coast. I finally settled down a little bit.
Oh, settled down. Oh, I find that very hard to believe. She's in one place, we'll call it that. I don't know if she's settled down. But look, thank you all for joining us this evening. We really bring these together. It's great to have Cass from Freedom Financial Solutions with us because we can talk about all these different topics that we'll sort of cover tonight when we've got all these different experts in the room that we can throw to. So it's a really great opportunity to get everyone together, have this discussion, answer your questions most importantly. So what I've got in front of me, I've got the YouTube up on my phone and I can see your questions or comments. So if you put any of those in the chat, I will be following along there and we will absolutely answer all those questions as they come through. So really, hopefully a valuable opportunity for you. We've got some things we can talk about, but I'll absolutely throw to questions that you have because that's why we're here tonight, to answer your questions and to help you on this journey. So make sure you're putting them in the chat. That really guides which direction we go. Just before we do start talking, a reminder that everything we say or show here tonight is not intended to be financial advice. It's our own personal opinions. We will have lots of opinions and lots of insight we can provide, but as always, when you're making an investment decision, you need to do your own research and potentially even seek professional advice if that's the case. If you're wanting to make an investment decision and you're not quite sure what you're doing, that's always a good idea. So look, we're going to introduce ourselves first because I know there'll be some people watching this who are very familiar with Ainslie, very familiar with what we do, familiar with Cass, familiar with what she does in Freedom Financial, but also there'll be people here who are brand new and watching this for the first time. So let's just start off with a little bit of an introduction. I'll hand over to you for this, Katrina. Just give us the quick background. Who is Ainslie? Why are we here tonight?
Yeah, we are also very excited to be here. It's a crazy time in the industry, isn't it, Chris? So it's great to jump on. But I will share a bit about Ainslie, and it's obviously one of Australia's leading crypto and bullion dealers. It's actually been family operated since 1974, so this year we celebrate our 51st year in operation, which is really, really cool. We produce our own range of gold, silver and platinum. We also offer Perth Mint and we are their largest distributor. We also have a lot of other different brands of bullion and different sizes, which is really great. Another key topic at the moment, which we're seeing in the office, is buybacks, particularly with the price of silver at the moment. It's great to know that we buy back everything that we sell, including other brands. So I'm getting a lot of clients in at the moment with a whole wide range of different brands. We definitely buy them back, given that their purity and weight is spot on.
Any comments?
We also have a number of different brands under the Ainslie umbrella, which is always good to mention. We have an arm of the business, Ainslie Crypto, the Gold and Silver Standard, Ainslie Wealth, and of course the Reserve Vault and the Melbourne Vault down in Melbourne.
Thank you for that. Now, I was just fiddling around with that. I'm trying to get the comments up. I'm not quite sure if that's working for anyone else. It's not working for me, but I've got Josh on the background there having a look at that. So if you can't make a post yet, it's coming. Cass, I'll hand over to you now just to give a little bit of a background of what you do, because it's a really important partnership we've had for quite a long time now where we come together to discuss this, because there is quite a lot of connection and synergy between our two approaches to things. So I'll hand over to you to introduce Freedom Financial.
Yes, absolutely. And who would have thought we would be where we are right now? How long have we been working together now?
A long time, number of years.
3 years perhaps. And back then I'm not an expert on gold and silver. I am just an accountant. I was a financial planner, I'm a mortgage broker, I'm a real estate agent, I'm all sorts of things, but I'm not an expert on gold and silver. But a few years ago, I just started following Ainslie Bullion's documents and their newsletters and everything that came out, and quite a few other experts on gold and silver, and started talking to my clients about gold and silver. And once again, I can't advise gold and silver, But I just started saying, I think that would be a really good place to invest. And who would have thought we are where we are now? Last time I heard silver up 78%, and that was last week. So no, that's just this
And it's
year.
moving quick. It's
Yeah.
absolutely moving quick.
So it's been an unbelievable journey, and I'm so glad that we've partnered with Ainslie Bullion, because all of my clients, I have referred potentially hundreds upon hundreds of clients to Ainslie, and I have not yet had one negative comment. So that's absolutely fantastic. So who is Freedom Financial Solutions? We were newly established after the 2021 debacles that happened in the world. But previously, I ran Holistic Financial Solutions, which was an accounting firm that I established over 20 years ago, and we specialised in self-managed super funds for over 20 years. And I personally have been involved in self-managed super funds for, it embarrasses me to say, but 27 years.
So you started when you were like 5?
Yes, yeah, absolutely.
Yeah, right.
Actually, I started when I was pregnant with my first son, so that's why I know it was 27 years, because I know how old he is. So we branched off from Holistic Financial Solutions and set up Freedom Financial Solutions specifically for the self-managed super fund market. And little did we know at that point in time that we were going to rapidly increase the way we did, because all of a sudden, all of the different dynamics that were happening in the world, all of a sudden people were very interested in self-managed super fund and very interested in gold and silver. And here we are today, sitting here. So I am the CEO and the founder of the firm, and here to answer all your questions about self-managed super fund, how it works, how to set it up, whether it's worth it, what the process is, or anything else that anyone has to ask.
Excellent. And those questions are working now. I can see them here. So make sure you put them in. I can see there's a couple already, and we'll absolutely answer those. Just keep moving through a little bit of this presentation first, and then I'll sort of pause, because they'll fit really nicely with a couple of bits coming up. But Drew, I'm going to start sort of digging into a few things tonight. And part of what people will be thinking is, why is gold so high at the moment? Why is it breaking, to record highs? Why have we got silver absolutely exploding higher? There's a lot in answering such a simple question, why is it going higher, that needs to be dug into. But we tend to frame it through this idea of what's the actual problem. The solution, a little bit of a spoiler alert, the solution is going to be gold and silver, but the problem is really important to understand. And you talk about this quite extensively. We discuss this on videos that we put out and content that we work on throughout the year. But really, we are in a bit of an unprecedented time at the moment. And I mean, that might seem like an overused term, but we really are in unprecedented times. There's a lot going on politically, geopolitically, around the world. There's a lot of global unrest. There's a lot of things that are happening. Give us your big picture. It's hard to cram all that into a short explanation, but give us your big picture view of what is going on at the moment that is part of the reason that we're seeing these prices.
Yeah, absolutely. So, like you said, the phrase unprecedented times is overused a little bit. It certainly is unprecedented for the last 100 years, but this is nothing new if you look back over the millennia. Every human-made system is prone to corruption, and the current global financial system is no exception to that. So, looking at the last point on that slide, 40% of all USD ever created in 1 year. So what does that mean? It means you can just create US dollars. They print them out of thin air. That means there's an unlimited supply of these things. So what is US dollars? What is Australian dollars? This is currency. Currency comes, the term we use for currency is fiat currency. Fiat is from Latin, which means by decree. So it's given its value by decree, by some sort of central authority. Why do dollars have value? And why do people refer to it as money? Now, for something to have value, it's got to have two properties. It's got to have limited supply, and it's got to take energy to produce it. So oil. It takes energy to get this oil out of the ground, and there's a limited amount of oil. So oil has value. Even something like human attention. which is becoming increasingly valuable. Human attention takes energy, and it is limited in supply. So human attention has value. Gold and silver are both limited in supply, and they both take energy to produce. The dollars do not take any energy to produce, and they're unlimited in supply. So by definition, I think Cass's dog is in full agreement.
Yeah.
He's got a future silver stacker for sure. But gold and silver, because they're unlimited in supply, they don't take energy to produce, they don't have any intrinsic value. The value given to them is assigned value. So for something to be called money, it has to have 5 properties. And already you can see, what we refer to as currency is missing 2 of those essential properties, which is limited in supply and energy to produce. The other 3 properties which gold and silver have as well is that they should be homogeneous. So 1 ounce of gold is the same as the other ounce of gold. They should be portable, so you can move it from A to B, and they should be divisible, so you can have smaller units and larger units. Now, the dollars have these 3 properties, but they don't have the first 2. The problem with this is that when we work, we give our energy. And what we're receiving in return needs to hold that energy so we can trade it in for other things that take energy to produce as well. Now, if we are given something that is constantly losing value, our energy is being held, our time and our energy that we spend working is being held in a vehicle or in a bucket, for example, that has a hole in it. So it's always losing value over time. And this is why people hold their wealth over the long term in hard assets that don't lose value, that essentially will at the very least maintain their purchasing power. Now, why is gold and silver going up so much? Because it's not just holding your purchasing power. At the moment, it's in a crazy bull run, and it looks like it will be for decades to come. Why is it doing that? Well, it's priced in dollars, and the dollars are losing value at an exponential rate. So if you just flip the gold chart upside down, that chart is the rate at which your dollars are losing value. The things that it's priced in is falling off a cliff. If you look at the price of gold, it essentially acts as a barometer for US government debt. So the more the US government debt goes up, the more the value of the dollar goes down. And this is simply because they need to issue more debt, which is more liquidity in the system, to service the existing debt. And the more debt that they issue, the more the value of the dollar goes down. And the more the value of the dollar goes down, the more the value of assets priced in dollars go up. Now, there's a host of other reasons why gold and silver are going up in value, from geopolitical instability to the BRICS nations versus the Western world, and moving from one global financial system to the next. But the gist of it is, inflation happens because governments are drowning in debt, and they create more debt to service this debt. That inflation is the dollar's losing value. So effectively, inflation is a hidden form of tax that funds government corruption. And the antidote to that, like we said, what is the solution to that, is holding hard assets that are actually money, not currency. So moving from currency into real money. Land has the properties of being limited in supply as well, but you can't move it from one place to the other. So people hold their wealth in things with limited supply, gold, silver, Bitcoin, that capture this loss of value, or what you would call, the inverse of inflation, essentially. So asset price inflation and consumer price inflation are the 2 types, and gold and silver fall into that asset price inflation category. And so that's essentially why people buy it. They buy it as a hedge against human corruption, against failing human systems, against geopolitical instability. And the reason it goes up steadily over the long term is the devaluation of the currency. But the reason it's exponential at the moment is because the government debt is increasing exponentially. And as you can see on the screen at the moment, we've got like $39 trillion of debt. Now, what even is that number? It's a joke, right? $39 trillion of US government debt. Doesn't make any sense. And this is actually a really great breakdown. So, to wrap your head around it, you can look at it more in terms of, rather than a government, imagine a family, right? So the US tax revenue is 5.2 trillion a year, and an annual family income, let's say, would be 52,000 a year.
So you're just chopping some zeros off there to make this make sense.
Yeah.
Because when you look, if you look at those numbers back there, we say they're big numbers, but they don't make any sense to us. So I think that's really important what you've done, just chopping it off. But take that a step further.
Exactly. So the US government earns 5 trillion in revenue and spends 7 trillion a year at the moment. So the comparison to that, to bring it down in the same ratio, would be a family earning 52 grand a year and spending about 70. So they're about 20 in the hole every year. New debt annually, 1.7 trillion. So that's essentially the equivalent of 17 grand new debt on a credit card every year. I don't even know how they're getting new cards at this point, but yep, 17 grand a year. National debt, roughly 39 trillion, or 38.3 trillion. I think it's closer to 39 almost now. So your credit card balance is like 400 grand, right? 380 grand on your cards. So these guys would be, well, they wouldn't even be allowed to get to this point, but at this point they'd be chased down by probably debt collection people.
And it's an excellent picture. It's an excellent view. Katrina, I'll ask you about this, but you get this question all the time. People go, well, okay, I mean, Drew's talked about a lot there. There's a lot to unpack. But really they go, but okay, I get there's all this stuff happening in the US, there's all this debt and whatever. But what about, I don't live in the US, I live in Australia. Is it an Australian problem? You talk about this a lot, like we've talked before about issues with the way our government approaches some of this. I mean, I know you've got a particular bee in your bonnet about the Victorian government, for example, and things but the point is that we've got many parallels that are happening here. And how do you address that with customers?
Yeah, I mean, I have this question all the time, particularly today. I think I had it about 10 times, which is great that people are coming in, and especially for the first time, they are wrapping their head around the hidden tax that Drew mentioned, which is inflation. And it's definitely not just happening in the US. I mean, it's global. And I explained it to a father and his 17-year-old son the other day about basically what $10 would buy you 10 years ago versus now.
Yeah.
I mean, I know it is very simple saying it that way, but we don't realize what the inflation is actually doing to us. It is in every single thing in terms of housing, food, energy, fuel, everything. And it's basically eating a lot of people alive, essentially. And that's why we're getting a lot more people coming in for the first time. People that are holding about $10,000 in the bank, I have had so many people just like come in and say, no, I want to transfer that and put it all into bullion. I feel like it's safer, and what I have in the bank is just going to devalue and decrease as the day goes on, which is essentially what is happening with the inflation.
And it pulls together a lot of what Drew was talking about. I mean, as I said, there's a lot there, and we will unpack all of that. And I can see all these questions here as well, and I will be getting to them in a second. But really, the main point for me in what he was saying is it's not necessarily the cost of everything is going up. It's the value dollar
going down.
Is going down. And that's a really important point.
It is so important, and I think that a lot of people are now waking up to it versus maybe 5-10 years ago. You're seeing it now because you are buying, I mean, a packet of those dishwashing liquid tablets, you're paying $72 for a packet of them, whereas 5 years ago they would have been about $30. I mean, that's a prime example of our value of our dollar just devaluing right in front of us. And people want to put their hard-earned money into assets that are going to preserve their wealth, not diminish their wealth right in front of them.
And Cass, I want to ask you about this because an angle that we often get is, what about the stock market? We've seen the stock market go from high to high. We've got some charts we look at in a minute that show maybe not quite as impressive as a lot of people think. But from the super angle, and I mean even not from the super angle, just from generally, most people when they think of investments, they only know about the stock market. They don't know there's any other options. But there are some significant risks in thinking that way.
Yeah, well, one thing I'd like to say on that before I say anything else, and I've actually been saying this to a few clients this week, trying to explain that gold and silver isn't this some radical alternative investment that's a bit fringe. It's not, because as you will probably show in your slides later, gold and silver has outperformed the Australian share market and outperformed property. even if you take into account dividends and rent. So gold and silver have outperformed. So why have people not been told about this, and why are people not advised to invest in gold and silver? And I explain it's because there are no licensed advisors that get paid to advise on gold and silver. So if you are thinking about property, real estate agents and property advisors get paid a fortune to get you into property. So they will advise you to get into property. And I'm guilty of doing that in the past. As I was a property advisor and real estate agent, I still am. Financial planners, I was a financial planner for 20 years as well. And I was paid to put you into the share market. So people are only advising you to invest in things that they are getting paid to advise you to invest in. And that's why nobody talks about gold and silver, because even Ainslie, as you've said in your initial slide, this isn't advice. You can't give advice. So all we can say is our personal opinions. And that's why I believe gold and silver is seen as this alternative investment. Whereas if people really know the truth about the returns on gold and silver in comparison to the stock market and comparison to the housing market, and knew the truth about it being a physical asset they can actually hold in their own hands, not just digits on a screen that can literally be push of a button wiped away if things really hit the whatever in Australia or in the world. So come to the share market. It's my favourite topic at the moment. I believe the share market is a complete illusion, and I've always felt that way. Even when I was a financial planner, I did not like recommending it, because the share price that people pay for a share in a company, let's just keep it simple. You want to invest in AMP, and you think the share price in AMP reflects the value of the company. It actually doesn't. The share price reflects what other people on the market are willing to pay for that share price. It's an illusion. It's a confidence. Do people have confidence in AMP or not? And then if the government makes some announcement, or AMP makes an announcement, or something happens on the market, all of a sudden that that price plummets or escalates. Does that change the value of the company? No. Does that change the trading in the company of like what they're actually doing, what they're selling? No. It's all just an illusion based on what people are willing to pay. And people don't understand that that's how the share market works, and that when confidence in the share market dries up, hit rock bottom, the share market falls very, very, very quickly. Like as you've got on the screen there, in 2008, 50%. In COVID, when it first hit, I didn't think this actual statistic, but there was a particular period of time there, I think it was only a matter of weeks, where the share market fell by 40%. And what was that for? Because there was a virus? What's that got to do with the share market? What's that got to do with all the companies that are trading and selling their products? Nothing at all. It was a human confidence in the share market fell. The share market fell.
And I think there's a really, like, almost in reverse, there's a great example at the moment. You've got a lot of the share markets around the world really reflecting the US share market, and that's all on the back of a lot of the AI companies. It's those 7 companies that are producing chips for AI. But when you look at it, I think that's a perfect example you've given, or the word confidence, because ultimately it's people going, well, we know AI is going to impact everything, but the only way we can express that confidence is to pump up those share prices. But what happens when another competitor comes on the scene and releases a better chip that works faster, or any of that?
Yeah,
like
exactly.
That confidence can evaporate very, very quickly.
Very, very quickly, as we've seen with some of the AI companies recently. And talking about the US, I mean, it's quite funny. Basically, the stock market can crash if Trump or Elon tweet.
Yeah. Well, that proves your point, doesn't it, really? Like, nothing changes in those companies on a tweet.
Yeah, exactly. And do you really want to be invested in an asset that can just be absolutely devastated in value because of a tweet? No. So yeah, I resigned as a financial planner in about 2021, because I just went, I don't want to do this. I can never look a client in the eye and recommend the share market. So yes, has been doing okay over this year, as has everything else. A lot of people talk about the bubble that will eventually have to burst, because it can't keep going the way it is. Gold and silver, I believe, and this is just my personal opinion, but it is based on years and years of research, gold and silver being the hedge to the share market crashes. And I think you've got slides I've seen. I don't know if you put them up tonight, but you've definitely got research where you've done into the past history of the share market versus the gold and silver market, particularly gold. And when the share market absolutely tanks is the years that gold seems to absolutely escalate. And I believe it's interesting because at the moment we're not seeing that. Gold, the share market is still doing okay, and gold and silver are escalating. What the hell's going on? Who knows? But
well, it could be a sign of that confidence you're talking about. Yeah, maybe people have gotten a bit smarter in that regard too, and they're a bit, or government at a government level at least, a bit worried about that.
Yeah, exactly. And we know the governments are buying gold and silver hand over fist. They can't get enough of it, and they're the ones that are actually driving the market. But when gold and silver normally are escalating when the share market is tanking, but now gold and silver escalating even faster than the share market, what is going on? I mean, I haven't got a crystal ball. I can't predict. But my personal opinion is at some stage the share market will hit the skids. It will do a massive drop. I follow some advisors that say, or some very, very prominent advisors that say we're in for a 50 to 80% drop in the share market. And I believe when that happens, gold and silver will escalate. So if gold and silver are already escalating, what are they going to do when the share market tanks? It's free for all. I believe we're heading to the moon and back. I don't know.
It's a really tough one because I know from my perspective on this, I'm very worried about a significant crash. I know Drew would be able to talk about that in quite a bit of detail of some timing, and there's some questions on this, so I'll leave that for the moment because I'll come back to that, Drew, because there is a question on the timing around a crash and what we think can happen there. But it is a considerable concern. I want to just bring it back to the driver of that, if I can find my mouse. There we are. Inflation. And Katrina, I'm going to ask you about this because you talked about it before, right? Like ultimately, inflation is a reflection of your dollar losing value. And when people get their head around that, they go, the penny sort of drops. They go, okay, it's not that things are going up. I mean, things will go up, things will go down, like individual things. But overall, inflation is really a reflection of your dollar losing that purchasing power.
Yeah.
We have these big examples up on the screen, like Germany, Zimbabwe. People will be familiar with some of those.
Yeah.
When you look at that, do you think that we can get to even those levels potentially, like of some of those extremes that we've seen in history?
I mean, I think so. Personally, with what we've seen, our government spend. I mean, we discuss Victoria all the time, and Chris hears me bang on about Victoria and our half-built stations there because we have run out of money as a state. But I definitely think that it could be the case. If we don't rein in spending and unnecessary printing of money, 100% I believe that we could end up like Venezuela.
And Drew, I want to ask you very specifically about the other side of inflation here, because if I put up the chart here, these are current rates, right? And we look at a number, there's certainly some high ones around the world, but we look at the number for Australia, we say the Australian inflation rate, 2.4%. Now, most people watching this will shake their head and go, well, like, you can't believe those official numbers.
What's the real number?
What's the real number? They'll make that statement. Now, I make the point, that is actually the real number. Because what they're choosing to measure when they're measuring inflation is a very targeted, specific. Now, we use this chart often to highlight what's really going on. It's not that they're lying to you when they tell you the inflation rate is 2.4%. Like, that is actually correct with a little asterisk. Talk us through that.
Yeah, I think, Kat was talking about earlier about like dishwashing liquid, essentially doubling in price. Now, that is consumables, right? So that's what we call consumer price inflation. That's your t-shirts, at Kmart, or your eggs at the grocery store. That's where you're going to feel your consumer price inflation. Call it CPI. That's the official number that we saw on the slide before. 2.5% for Australia. I mean, look, even I find that hard to believe, even just for consumables. Like, eggs have not gone up 2.5%. I eat a lot of eggs, and I'm constantly complaining about how expensive they are now.
Well, they just change what things are in the basket to manipulate that one a little bit, but we don't necessarily need to go down that rabbit hole.
Yeah, but exactly
We
right.
can, we
And that,
can.
we can, but that is the point. We don't need to, because this chart's really powerful, right? So the
Just
dotted
pausing
line.
on that. Just pausing on that because I do want you to explain in a second, Cass.
Yeah, I just had something to say on inflation that I've just noticed is that, yes, okay, they measure inflation based on a certain basket of goods, so they can basically hide it and say it's only 2.2 or 3%. But if you own an animal, go to vets, weddings, funerals, all the things that are necessary, but they're not measured in that basket. I
Yes.
went to the vet the other day to get some tablets for my dog who's got a rash on his skin. I used to pay $40 for these tablets. They weren't the same tablets, but the vet prescribed tablets for $480 for a month.
Ooh.
Um,
Oh my gosh.
and then I said, no, I'm going to the chemist to get some antihistamines. But basically, if you are a pet owner or anything like that, where yes, it's discretionary expenditure, so it's not measured in the inflation bucket, but people are willing to pay that because they love their animals, or they want to get married, or they've got to bury a loved one. All of a sudden, the cost, the inflation is not 4%; it is 400%.
And that's what I mean. You really can go down that rabbit hole, and like you don't have to dig very far to find that those numbers just do not make any sense whatsoever. But Drew, the point of this chart, we've got that differentiation between, even further to say that consumer price inflation you were just describing is not the whole game even remotely.
Exactly. So this chart on the screen, we've got 3 lines here. You've got a dotted line, which is CPI. So that's your basket of goods, your bread and eggs. You've got a solid black line, which is global liquidity. That's, you can, in simple terms, that's the amount of money, or I should say the amount of currency sloshing around the global financial system. So the more money they print, that black line could be thought of as global debt. It could be thought of as the amount of money printing that's taking place, the currency supply. It's a bit of an aggregate of all of these things. The orange line is what we refer to as asset price inflation. So it's 2 different types of inflation: consumer inflation and asset inflation. The orange line over there is just an aggregate of crypto and gold, but you can add things like land, housing, stocks into that, and that line doesn't look very different. What we can see here is that hard assets, or assets in general, keep pace with increase in global liquidity. So that solid line, which is government debt, or you could think of it as the devaluation of the currency units, that keeps pace with the orange line. So your gold is going up essentially at the same rate at which your dollar is going down, or at least at the same rate at which the rate of dollar units is increasing, so the rate of change of dollar units. Now,
So you're still not even making any money there. That's just keeping up.
yeah, I mean, you can see that there are periods of outperformance and underperformance, but over a long term, it does tend to generally keep up with that. Right now, in the short term, it's outperformed it quite significantly, and I think that phase should continue for a while. The important point to make here is that dotted line at the bottom. That's your CPI. So the rate of interest that you will get at a bank over a long enough time frame will always underperform the CPI rate on a long enough time frame. So and that's because the CPI numbers are manipulated and a whole bunch of different things. But essentially, individuals earning money, saving money, and putting it in banks are on that dotted line at the bottom. Your wage increases annually are measured against CPI as well. So you're earning money, you're saving money, you're putting it in a bank, you're getting your wage increases, and you're doing all the, quote unquote, right things over decades, and somehow decades later you end up poorer. Now, the orange line is essentially the solution to the problem. That gap that's widening between the solid lines, so the black and orange line, and the dotted line, that alligator jaw, you could think of that as the wealth gap. And that's that disparity where everyone who's doing the right thing is on that bottom line, just getting poorer and poorer, while things like land, housing, gold, your stocks just get further and further out of reach. And a very simple solution to jump essentially from the dotted line to that black and orange line is to invest in hard assets. So rather than being a victim of this corrupt global financial system where your dollar units keep losing value year after year because of the inflation that funds the government debt, you can actually benefit from this system by investing in hard assets that go up in conjunction with this inflation, in line with this increase in government debt. And those hard assets will increase in value, so you will benefit from the decrease in value of currency units rather than being a victim of the decrease in value of currency units. So you've got to jump from currency to money, from dollars to hard assets. And gold and silver is an easy way to do that because you're not going to buy, a couple $1,000s worth of land every month. Stocks, as we've discussed, are quite risky. But gold and silver provide that fractional, smaller unit where you're able to dollar cost average on a weekly or a monthly or a quarterly basis into these things. You can hold them yourself. You're not paying taxes on it while you're holding it. As far as owning land goes, you're really just renting it from the government. Try not paying your land tax for a couple of years and see who really owns that land, right? So, there's no cost to own it. You hold it, it's yours, it's a God-given asset, and it's with you, and no amount of human corruption can affect it. But it's human corruption that actually results in its value going up over time, and you'll benefit from holding that sovereign asset over the long term. So it gives you freedom, it gives you a bridge from being a victim to actually benefiting from the situation, and it protects you from human corruption, whether that's in the form of land tax or devaluation of currency.
Now, we will dig more into the solution around this because we've really given quite a comprehensive overview of why the world's in a bit of a mess at the moment, I think, so far. But what I want to do is just pause here for a moment and go through and answer some of these questions. So I'll sort of direct them to the person I think probably is the best suited to answer them. So there's a question here: if I buy bullion under 5,000, then want to sell it, do I need to show ID if the amount is still under 5,000? Now, so what I'm going to do with some of these questions, they will be a little bit out of, we'll still address some of these things a bit later, but we'll go through them now anyway.
Yeah.
So, Katrina, I'll sort of give that one to you.
Yeah. Well, you can definitely come in store. I mean, it depends on if you would like to come in store and get the full customer service experience, or you can opt to use the window. So if you're using the window, you don't need to provide ID if you are selling or purchasing under 5,000. If you are coming in store though, regardless of the amount, you will need to present ID, and it's just for security reasons. So it doesn't go anywhere. But if you wanted to obviously sell and buy under that 5, you can definitely use the window, and you are definitely anonymous.
And there's a question here, and if the amount is over 5,000, do I then need to provide my details, become a taxable event? The taxable event aspect of this has nothing to do with us. That's right. To do with you and your accountant over every transaction that you make. That would be as it would be if you were buying and selling any asset. Mm-hmm. And then someone sort of said, I thought the amount was 10,000, and the 10,000 number is a completely different number that is to do with cash transactions. So really the 5,000 you can do without any ID. Over 5,000 you would have to come in. Yeah,
over 5,000 you need to come in. You just need to provide ID, and it doesn't go anywhere. So.
There's a question here, are sovereign gold silver coins subject to capital gains tax? Now, Drew, this is an interesting one because there's certainly constitutional arguments that people make. There's lots of arguments people will make around why they shouldn't be, but at the end of the day, gold and silver are assets like any other, subject to tax like any other. That would be your sort of take on that?
Yeah, look, we're not tax experts. I'm certainly not a tax expert. Cassie, so we'll defer to her.
Cassie's going to say pay your tax.
Am I? No, what I wanted to say about that is that the tax office, as far as I know, I used to work for them, don't hold that against me, and as far as I know, they do not have any data matching with gold and silver or with bullion dealers like Ainslie. So unlike crypto, which came to the market, I think about maybe 15 years ago, the tax office got onto it quite quickly and set up a data matching system with crypto dealers. So if you are going to lodge your tax return and you've sold crypto, it's on your MyGov report. It says you have sold crypto, please report your gain. They don't have that as far as it goes with the bullion dealers at this stage. So when you go into Ainslie and buy on the record, so you've bought more than 5,000 and you've provided your ID and you've got an invoice and it's in your name, that does not automatically get reported to the tax department. The only way the tax department would get that information, correct me if I'm wrong, because I'm only talking from a tax accountant side of things, but the only way the tax office would get that information is if they systematically came into all of the bullion dealers with search and data analysis capability and asked you for all those records. Is that still correct?
That would
need
be
a
correct.
warrant,
Yeah,
yeah.
that's right. I think what people do need to understand is that you're exactly right, Cass. But I think we're heading into a world where data matching everywhere is on the
Yeah,
rise.
it will come. It will come with digital
Yeah.
ID. We all know that. But then I know also from working for the tax department, there's also a threshold. So when they will eventually catch up on data matching because they watch what's going on and they're seeing everybody suddenly be turning to gold and silver. They will, in a few years, who knows whenever, they're a bit slow, they will eventually come and say, we need to do data matching on gold and silver transactions. Then they will come to all of the dealers, and Ainslie is just one of, I don't know how many, but there would a lot of gold dealers. Then they have to go and all of you dealers and require you to, by legislation, to force you to provide constant data matching. Then are they going to go back through all the years and look at all the records? Probably not. They won't have the resources. If they do, they will look at the big transactions, people who are buying big amounts of gold and silver. So for people who are worrying about going in and buying, say, $50,000 and it's on record, I wouldn't be worried about that as much as you are, because Ainslie are not reporting that straight to the tax department. Having said that, of course, I'm a tax accountant, and of course you have to report all your gains on your tax return because that's the right thing to do.
Yeah, and I suppose it's more of a question of why people turn to gold and silver as well, is they want that they might want to that they want to do the right thing, but they also want that privacy. They want that ability to have a say in what, you know, how they're documenting and how they're doing all of this, and following the rules doesn't require it to be all taken out of your hands. I mean, that would be the philosophical argument.
Yeah, and also another thing that people get a bit confused about is if you've bought gold and silver and it's gone up in value massively like it has this year, you're not taxed on that. You're not taxed until you sell.
Yes.
So, and even when you sell, if you've held it for more than 12 months, you get a 50% capital gains tax discount. And then there are some very, 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 they're perfectly legal. I say they're creative, but they are creative, but they're also perfectly legal ways of absolutely minimising, if not completely eliminating that gain through superannuation contributions. So, you know, I always say to people, if you're going to sell gold and silver or crypto or any asset for that matter, always talk to your accountant or a good accountant before you actually sell, because there are so many things we can do to eliminate that capital gains tax.
And we will talk about that in a bit more detail when we talk about the super stuff, because you've opened my eyes to a few suggestions there that make a lot of sense. But there's a question here: how much income do you need to be for it to be worthwhile to move into a self-managed super fund? I mean, we'll talk about super in more detail, but that's a good opening question on that.
Yeah, okay, so it's not about your income, it's more about how much you've got in super. So anyone can go into SMSF. There's no minimum amount. We have set SMSFs up for very small amounts of super, like $30,000, $40,000, because the client specifically wanted it to invest in gold and silver or crypto. And they've done very, very well. So they've now got a lot more than 30,000. However, our general rule of thumb is that anything below 150,000 is going to be more costly for you in fees than your current superannuation. Some people say, we don't care about fees, we want to do it anyway. Fine. But if you ask us for a comparison, 150,000 is about the minimum. But don't let that put you off, because an SMSF can have up to 6 people. So it is actually not very hard to get that minimum 150,000.
Yes, and we will talk about that in more detail too, because I would make some arguments to suggest that even at a lower number, what you can't do in the traditional industry funds makes it worthwhile straight up. So we will come back to that. A question here, I think you've probably answered: if we buy bullion now, sell for a profit, what are the tax implications? Is it subject to capital gains tax? Are bullion dealers bound to notify agencies? I think we've talked about that. Drew, about to pump our bags again. If only people would hear what you're saying, the world would be a better place. So a fan there, Drew. No, you're particularly silver out there trying to fight the good fight. Cass, I need to get in contact to set up an SMSF, even download the forms ready to go, just need to do it. So we'll talk about that at the end too, like how people can get in contact and make that process. Holding gold and silver, no-brainer. How long do you see the bull market lasting, Drew? That's that's probably a question for you there. The current market that we're in, I mean, this is a really quite important question because time frame matters. We have debates about this all the time. You know, whether you're short-term trader trying to get in and out over the next few weeks, whether you've got a time frame of the next couple of years, or whether you've got a time frame of decades, depends on who you are and your situation. So there's not a simple one answer for all, but you do provide information that people aren't willing to provide, where you have some sort of targets. So do you want to give us the quick rundown on some of those targets?
Yeah, absolutely. Look, if you have a long-term time frame, like you're saving over multiple decades for retirement, I mean, the question of when does the bull run end, the answer to that is when does the dollar stop losing value? Right? When does the US government debt stop going up and start going down? That will require a complete collapse of the current system and a major, sort of financial reset. So not anytime soon is the answer to that. Gold has, again, if you look back at the Roman Empire, an ounce of gold bought you the finest, silk toga on the market, and an ounce of gold today will probably buy you the finest suit that you can possibly buy in Melbourne. So, has that gold value ended over, has it gone up or down over all that time? Well, it's held its value. In terms of looking at a slightly shorter term bull run, gold and silver, like most other assets, tend to go through their own cycles, and gold, much like the dollar or the DXY, goes through about an 8-year cycle. So the cycle started in 2022 and the next cycle starts in 2030. What that means is in a strong cycle, you tend to have a very strong move towards the final stages of the cycle and then a consolidation into the next phase of the cycle. So we're not even at the halfway point now, which is 2026. So expecting a strong move into the end of this decade and then a consolidation into the start of the next decade, followed by the next cycle, which again, the next cycle, usually getting in early on is the opportunity. And then you have that 8-year window where you can expect a strong bull run to, the end of that cycle. Now, if you look at where we are on, socioeconomic timeframes, we look at these 80-year cycles and we're moving from one to the next. The previous one ended with the Great Depression and, the Roaring Twenties and World War II and all that. As we moved from the previous one to this one, gold and silver went on a 35-year long bull run, so we're at a similar phase socioeconomically now. So expecting multiple right translated 8-year cycles would be reasonable. Right translated means that the peak of the cycle is right of the midpoint. So if you're looking at an 8-year cycle, that's a peak more than 4 years from the start of the cycle. So this cycle starting in 2022 means the peak, anytime after 2026 would be reasonable. Usually a stronger cycle will be, closer to sort of that 2027, 2028 time frame, and then consolidation. So just absorbing that up move into the next. Those consolidation phases are usually when people add to their portfolio, make adjustments, re-examine things. And when it's having these crazy runs, that's usually when, the train has left the station and it's not really safe to board or, disembark a moving train. So generally that's when you sit back and just watch your portfolio do its thing. So that's the, multi-decade view. That's the 8-year time frame view. On a slightly shorter term view, like I said, the midpoint for this cycle is 2026. There tends to be a consolidation into the midpoint, so that what they call the half cycle low, and the strong move leading out of that as well. So we had a strong move leading into this half cycle point, which is quite normal. Then a consolidation into this half cycle point. So some sort of cool off should happen after this next move, leading into the half cycle, followed by the next move after that. So not that it matters too much with these investments because they are so long term. Once you start getting into these half cycle time frames, 3, 4, 5 years, and getting close to a half cycle, we're looking at like a 1 or 2 year time frame. It's kind of irrelevant. Usually when the price is cooling off, you're stacking. When it's moving fast, again, for some people that doesn't even matter. They'll just stack every month without thinking, and those strategies tend to work the best long term because you can try to time the market and get it right 3 or 4 times, get it wrong 3 or 4 times, and it's kind of pointless. So you just average in at a steady pace, look back a couple of decades down the track, and that's a much easier way to do it and frees up your time to spend time with your family, do things that you enjoy, and that is the real wealth. Sitting looking at charts all day trying to time the market, that's not wealth. So don't, there's no point trying to get too cute with it. But yeah, that's my idea on whether, the current run, we should see a bit of a cool off, then another strong run for a couple of years, and then multiple decades of runs. In terms of, leading into, most people watching this will be pretty old by then. So, yeah.
Yes,
Well, I think
I could add to that if I can.
yeah, sure.
I often say to my clients when they ask me when's the best time to buy gold and silver, and I say whenever you've got spare money in the bank account.
Mm-hmm.
Yep.
because money in the bank account to me, and you had a slide up earlier that talked about the Bail-in Act and things like that, money in the bank account to me has many risks. And one is, yes, they could freeze your bank account if the economy starts failing. But secondly, is money is going backwards at a rate of knots. It's the only thing I remember from, not the only thing, but it's one of the main things I remember from my degree back when I was 20, is inflation is a killer to money. So if you've got money in the bank account, it is going backwards. Somebody said to me at 1% a day, I don't know if that's correct, but if you've got money in the bank, why leave it sitting there? It could be confiscated, it can be frozen, it can go backwards. You can put it into gold and silver and it goes hopefully upwards. So I basically buy gold and silver anytime I've got spare money.
And just to add to that as well, like, you know, the dollar going down, like we said before, is the government debt going up. And, you know, looking at some of Mike Howell's work, who does a lot of stuff with cross-border capital, who does like global liquidity analysis, they were looking at projections for the US government debt, you know, between 10 to 15 years from now. And the fair value of gold based on a barometer for US government debt, and I think they got close to about 25,000 US per ounce in 15 years. So that's like 30 G's Australian in 15 years. I mean, that's, you know, you wouldn't worry too much about how long this bull run's going to run if you're just gradually stacking and at least your dollar's maintaining that power. Because you can imagine a loaf of bread's going to be like $150 at that point. So,
yeah, well, that's the thing. We go, oh, look, I made all that money, and it's all relative to that inflation, that insidious inflation issue that we've highlighted already. There's a couple more questions here we'll address, and then we'll dig into some more specifics of. Is it true that silver bullion could be running short? I'll ask you this, Katrina, due to that industrial use. Now, it has been, well, part of what we've been talking about is you've got this AI angle, you've got the solar angle, you've got the electric vehicle angle, you've got all these things are just chewing up massive amounts of silver. We're seeing that with our suppliers now at a level where they're going, actually, it's pretty difficult to get our hands on large quantities of silver.
Yeah, it's been crazy. I think that we've discussed this on a number of insights about the amount of silver needed next year just to get by with all production that's gone on. I think it was over nearly 500,000 ounces, and furthermore to that, they need the silver. So they're mining and all of that. But I think general supply, we're very lucky here. We've got a lot of supply. But I think with the amount of people that are coming in, it's just something to note that obviously it's going to go back down the line. And so there are general wait times, sometimes when it's quite busy through our supply chain, I guess you could say. But yeah, I think there is a squeeze, and I think it will only get worse in my opinion.
And there's an interesting thing that you just reminded me of when you were saying that too, this idea that at any price, like when you're talking about some of these use cases, they will buy the silver regardless of what the price is. Like, they don't care. They need it.
Yeah, they need the silver regardless. It's the same that we spoke about, I think, 2 weeks ago with platinum.
Yes.
Exactly the same. So whilst we, you know, Dhruv and I discussed this on multiple occasions of dollar cost averaging and buying when you've got spare cash or during the month. But these big companies and manufacturers are going to buy regardless, and they've got a set amount of ounces or kilos that they need to make up each and every black order that they do. And I think that's really squeezing into obviously the price that we're seeing now. And Chris and I discussed heavily, I think 2 weeks ago, how in my opinion, I believe the price should be well higher, and I think that we were even discussing about $1,000 an ounce for silver. So, which
seems like some of these numbers seem a bit crazy, but when you actually go look at why or how you come to that conclusion, it's not as crazy as it first seems.
Yeah, that's right.
Look, there's a question, very specific question here. Is it worth buying metals and taking them home or unallocated, which is better? I'll ask you that one as well, Katrina.
I mean, it's a really great and interesting point, and I was chatting to a client today about it. It's really dependent on the client. So some people are moving interstate. I've had many clients move interstate, moving houses, renting, renovating, and they feel more comfortable putting it into secure storage. I can't speak for other businesses, but I can say at Ainslie, all the metal is backed 1-to-1, which is so important. Like, we get clients that'll come up from New South Wales or down from far north Queensland, and the same day they'll pick up their unallocated because we have it here ready for them. And so I think that's very important. Obviously, unallocated, it's all fully insured. You aren't paying any ongoing storage fees, I think, which is a great incentive for people to do secure storage. Some people also just want to store it at home, and I mean, that's completely fair and that's completely fine. I've had a lot of clients in rural areas, and they just, with the amount of climate stuff going on, they just prefer to store it with us. So either or, you do get your metal. You can, if you're doing unallocated and you're deciding to store with Ainslie, you can have it shipped out. You can redeem it at any time, or again, you can sell it back to us at any time. So you've got that sort of flexibility with unallocated. You can do the same if you're storing at home, but obviously you've got to bring the metal in.
Yeah, and
so
we'll
the difference. But
we'll run through some
later.
more of those. I do want to just focus on your questions, so
Yeah.
we'll fly through some of these bits a
Yeah.
little bit later in the presentation
Yeah.
part. But your questions are really what we're here for tonight, so I'll always prioritise them. Is silver at this point? I think we're talking about with the shortages, and yes, I think this is the answer. We are at that point. Paul B from Country Victoria. Ainslie and Freedom Financial are among the best moves we've made. Highly recommended. So thank you for that, Paul. I'm a member of Ainslie Saver. What percentage of silver to gold do you recommend? Drew, this is a question with your name written on it.
Look, it's hard to answer that without knowing a little bit more information about the individual.
Well, answer it if you were. I mean, I think I have a bit of a clue of what your answer is going to be here, but if maybe a little bit of rationale around what you would do in your situation if you went, okay, I'm coming in new, I've got to decide what I want to buy of gold, which allocation of gold and silver at the moment with what you know.
It comes down to your time frame, right? Because silver is a more volatile asset than gold. You need to hold it for a longer time frame to sort of smooth that volatility out. You can imagine like a lot of movement on a graph, but you zoom out over the long term and that volatility gets smoothed out. So because gold is a lot more stable, if this is something that you're going to need to possibly sell 6 to 12 to even 18 months, gold is just a safer investment, right? It'll probably be a lot steadier. You can access it a lot more like a bank account. If you're looking at something over 5, 10, 20 years, silver is historically undervalued. So, looking over the really long term, silver to me is a no-brainer. If I was looking to invest in something and hold it for the next 30 years, I'd just go 100% silver myself. If I was looking at investing in something for the next 6 to 12 to 18 months, I'd go 100% gold. And then everything in between 18 months and 30 years is sort of in between there somewhere, right? So
that's the most diplomatic answer you've ever given to this question, by the way. You actually I like this one.
Well, I can't really say go all in on silver today, because if we get a cool off into the hard cycle lows in 3 months, and you don't want to be buying silver today and selling in 3 months. The spreads on silver are slightly higher than gold, and the volatility on silver is higher than gold. So gold is really a no-brainer. It's very much a replacement for a bank deposit. Silver, on the other hand, is more sort of, you could think of it as, leverage on gold in a sense. It's sort of its own thing as well. But the gold to silver ratio, tends to spend multiple decades well above 50, multiple decades well below 50, and then back again. So we spent multiple decades well above 50. We're due for multiple decades well below 50. So if you just, and generally when the gold to silver ratio is spending multiple decades well above 50, the silver price tends to be consolidating. So that's the time over decades to average into silver. And then when spending those multiple decades well below 50 for the gold to silver ratio, that's the time to average from silver into gold. So you can trade from silver into dollars or silver into gold. Look, generally for someone, 80-20 gold to silver is very conservative, sort of 75-25, sort of similar. And 50-50 tends to be, quite balanced. I think that's reasonable. But look, if you're looking for, 10-20 year investment, silver's no brainer. Most people for saver, though, are a little bit more active. So, 50-50 is reasonable.
See, I give Drew a hard time about that, because really what he wants to say, I'll just speak on your behalf, really what he wants to say
I know what you're going to say here.
Buy silver is what he wants to say. But he did a lot of words there to tell you that in a roundabout way. But I appreciate that, Drew. That was a very comprehensive, covered for everyone. And that was the correct answer. But deep down, all he wanted to say was buy silver. Can unallocated be changed to bullion bars? What's the price cost? There is no cost for that.
Yeah, no cost. They're your bars, so you redeem them. You can come in store and grab them.
The
Anytime.
only caveat on that is because they're unallocated, we choose which bars we give you, so you don't necessarily
but
get to pick which ones. But
that's right. If you don't mind the branding, I mean the buyback's all the same. But if you specifically want like Perth Mint or Ainslie, come and chat to us. And there's a barring fee for that, but we can always accommodate and see what like work with you and see what you want.
Yeah. So you can get whatever you want, but at the
That's
end of the
right.
day, coming and getting the bars, there is actually no cost on that.
Yeah.
Look, we will. I'm very conscious of time, and I sort of want to wrap this up probably in the next half an hour. So if you have more questions, put them in for sure, and we'll go through some of these points that we've still got here for people who might want some more details. I really will be driven by your questions though. So if you have specific things that you want us to cover, ask them, and I'll sort of jump to them over anything else. But the idea of what is bullion here, you know, for people who are really unfamiliar, you brought some samples along, Katrina. Do you want to just sort of talk us through the bullion angle here for people who are new?
Yeah, so I'll lift this one, this piece of bullion up. This is a 1 kilo silver Ainslie bullion bar. And with all our bullion or any bullion, you'll see that it's always imprinted with a recognised mark. So ours will have the newer Ainslie logo. You can also purchase Ainslie Vintage, Perth Mint and other brands. It'll always have its weight. So either grams, troy ounces, which is slightly different to your normal cooking ounce, or kilo on there, and the purity of the bar. So keep in mind we do have silver being 99.9%. Most of our bars will actually say 4 nines for the silver, and gold internationally is 99.95, but we sell our gold in Australia for 99.99%. Which is a great point to add.
I'm going to bring you in on this in a second, Cass, but the types of bullion, I mean, you've got a couple of different examples here.
Yes.
Cast bars, minted bars, coins, and it's
right.
personal preference, all that stuff. So if you just maybe show us those different samples, and then I'm very interested after that, Cass, on your perspective from a super perspective, from that perspective on super, whether you recommend one type over another, people pick and choose whether they want or whatever, but I'll ask you that in a second. If you just show us the types first.
So this is your cast bar. It's poured and into the mould. So it's nothing too fancy. You're just basically paying for the silver for the bar. You do have minted bars which come in this tamper-proof packaging here. Quite nicely designed. It's pressed with a 5-ton press, and on the back you'll see that it does come with a specific serial number, QR code which has the authenticity of the bar, and it'll show the purity and the weight on the back as well. And I'm sure Cass will talk about this one as well. You also have the coins. These are silver coins from Perth Mint. All of the coins will have the sovereign on the back, and Perth Mint and the Royal Australian Mint are the only 2 mints licensed to produce coins in Australia under the Currency Act. Anything else that aren't coins, that do look like a coin, does not have the sovereign on the back, and they're considered rounds. So exactly the same silver value, purity and weight. Just one is a coin and one is a round.
And at the end of the day, it doesn't matter. It's about the weight, but people do have preferences. The reason I'm very interested to get your take on this, Cass, is when we're talking about super, probably people can think about it a little bit differently, whether it's the different sizes they might want for how they're going to use it in their super, or whether it's uncertainty around coins and things and complexities with audits and whatnot. Do you just want to give us a bit of an overview of your take on the super angle here?
Yeah, so I talk to clients a lot about basically 2 things, is their time frame and their need for liquidity. So if I'm dealing with a 30-year-old who they're not going to be able to access their super for 30 years, they may as well just buy the biggest bars that they can, because the price per ounce is cheaper in the bigger bars. So just buy the big bars, put them aside and wait for 30 years. If it's someone closer to retirement, they have a different need. So they may need liquidity. So when they retire, they may need to be drawing down a pension, fortnightly, monthly, however they choose. So they may need to be selling in their gold and silver, say every month or every quarter, to provide that liquidity. So they are better off. They can have some big bars, but then have some smaller quantities so that they can sell off every 3 months. So they're not having to sell, say, for example, a current 1 kilo bar of gold, around the $210,000 mark last time I looked. They don't need to sell that whole bar just to provide a $20,000 liquidity. So they're the things we talk about. And also when it comes to coins, there is a bit of a dispute about that. I personally have had no problems buying the coins and having them in my SMSF. Some auditors somehow, for some reason, feel that they are collectibles and they're under a completely different regime. Those auditors are actually incorrect, because as you just mentioned before, it's on a per weight ratio. So the way the tax office ruling is, if it's bought and sold on a per weight ratio, the fact that there's a slight markup because it's got some fancy printing on it does not affect the way it can be dealt in a SMSF. Some auditors get a little bit funny and say they're a collectible. What a real collectible is the coins that are, a 1926 rare penny. That's a collectible. So, and you can still buy them in an SMSF. They're treated differently for the auditor. So, I mean, my answer to that, if you have trouble with your accountant and your auditor, some accountants even say you can't buy gold. You have to only buy you have to diversify and only put a certain percentage of your portfolio in gold and silver. They're wrong. Some accountants will tell you that you can't store it at home. They're wrong. Some accountants will tell you you have to insure it. They're wrong. If you can't get the right answers out of your accountant, well, Freedom Financial Solutions, we're here for you.
Yes, and we will definitely talk a little bit more about that, because the big one for me out of what you just mentioned is the fact that you can physically hold your super, and that is an absolute mental game changer for a lot of people when they realise, wait, hang on, it doesn't have to be locked up. We'll come back to that, because I want to spend a bit more time on that one. I mean, I think we covered this, Drew. I think you sort of covered a lot of the bullion fundamentals. We've got the sort of what is crypto here. I don't want to spend too much time on that, or really a lot of time at all on that tonight, because we did do one of these recently, the crypto basics and banter, and I do encourage people to join us for those if you want to dig, because there's a lot there. But I'll, in fact, I'll take this one. I just want to say to people that if you don't believe in crypto, you're anti-crypto, you're a skeptic, whatever it might be, next year when we next run one of these, come in and join us just to have a conversation about what is going on in that space. I look at Bitcoin particularly like as gold 2.0, it's up there, digital gold 2.0. My opinion on this is, if I'm right, even a small amount is worth having. You can be a complete skeptic. I don't care what you believe in it, what you take from that. A little bit is all, if I'm right, it's still on that adoption curve. There's still massive gains. If I'm wrong, you only put a little bit in. Like in terms of the gambles we make every day and what we're prepared to risk on, I think it's a risk everyone should be taking. But join us for that, and we will discuss that in more detail in that forum, because I think tonight really we do want to focus on the bullion, and I know a lot of people have that perspective. Castle already sort of covered this what to purchase angle. Think about your selling, because you can't, I mean, you make this point all the time, you can't go chop it up.
Sell. Yeah, I had a client in the office today, and he just said, well, I think I'll go this way, and I said, you can definitely go whichever way you prefer, but personally how I buy is, I'll buy when I can, and I just think about when I want to sell in the future. So
and there is a question here I just want to pull in on that. Can I swap silver for gold at spot? What is Ainslie's perspective?
Yeah, of course you can definitely swap silver for gold and gold for silver. If you're coming into Ainslie though, it is a buy and a sell, and that's how we have to do it for our system that we've got. We're getting heaps of clients that are coming in and swapping one for the other. It's incredibly popular.
And just to, I don't know if this was the intent of the question, but this idea of spot, like the spot price, I don't know if that's what you actually meant, but if that was what you meant, it is never at the spot price.
No, that's right. No, it's a great point that you made. It's never the spot price. It's slightly under, and it's not a massive chunk. Just keep in mind the margins for metals are incredibly small, so the buy and the sell is not a large amount at all. And they all are also on our website 24/7. So if you want to have a look,
You can see what those prices are.
exactly right. Yeah.
And the way it's moving at the moment, it's been more than covering those spreads each day, really.
That's right.
Like Drew, you've already talked about this a little bit. I think we won't labour on this anymore, other than to visually point out what you were saying. And really, this probably isn't even the best chart to represent it. It has spent multiple decades above that 50 line, which means that 50, just for visual, it means when we say the 50 of these, the 1 ounce silver to buy one of these is, and at the moment, what's the ratio, Drew? It's like more like 80 or something. It's up there, 70 something.
Yeah, it's between 70 and 80 at the moment. But I mean, you can even see on this chart that, leading into 1980, the ratio was down at 25.
And that's a big difference. And like how I would argue for people is if you could take 25 of these and swap it for one of those, then you've made a lot of metal. Even just trading that doesn't matter what the price does it?
Exactly, compared to 75 today, right? So 3 tubes of kangaroos for an ounce of gold versus 1 tube of kangaroo.
You walk out with 3 ounces. You've tripled your gold in that sort of ratio. And people do trade that. I think it's a very unknown thing to a lot of people. I think you've actually opened a lot of people's eyes to that by constantly talking about it. But it's right there. It's an opportunity.
It's a very slow trade. It's a very simple trade, so it's one that I can manage. And yeah, I'm glad that you're paying attention.
Now, we'll talk about this. Cass alluded to this before, actually. The main reason people buy gold and silver is a diversification play. It's been outside the system. Many of the things we talked about tonight. Cass specifically mentioned this chart talking about the uncorrelated to other investments. Drew, you've spoken about this multiple times, that if you were in gold during those years of major pullbacks, you were significantly ahead.
Yeah, it's important, especially for people reaching retirement age, because people got their super funds and stocks, and in the US and various pension fund instruments and things like that. If you were retiring, let's say the most recent one with the the global financial crisis. Well, you got COVID on there as well, but with the GFC, the S&P declined about 60% in about 12 to 16 months. I know you got 40% on there, but that's the ASX annual return. I'm talking about the S&P. The ASX was down 40%, a little bit healthier, even though negative 40% is half your super gone. But these,
it's crazy.
That's because Australia is mainly focused with commodities and things like that. Now, it's important to understand that it took a year and a half to reach that bottom, but then it took many years to just recover that. So you're getting close to your retirement age, and you've got to work for another 5 to 7 years to just break even on where you were. That's a big chunk of your retirement gone, and that's quite a tragic situation. And that's for people that actually had anything left, because when these things collapse 40 to 60%, a lot of the pension funds themselves blow up. The super funds themselves, the banks, they collapse. So when the tide goes out, you see who's swimming naked, and most of these people are out there swimming naked. They're all over leveraged and things like that. So gold and silver, on the other hand, what happens is when you have a global financial crash, and these happen without fail roughly every 20 years. This is based on a land cycle, or that land debt cycle. What happens in the final stages, which is where we are now, is that everything gets over leveraged. Most assets move up together. Like Cass was saying, what's going on? Why is everything going up all together at the same time? That is quite typical of this final stage. But what happens is then the over leveraged instruments tend to collapse. So stocks and even land, which gets over leveraged, have a strong pullback. Gold and silver very temporarily, just for a couple of months, pullback just so people have to sell whatever they can to cover themselves. But they recover those highs within a couple of months and then continue on for multiple years on really strong bull runs. And silver after the crash actually outperforms gold. So that's usually, what I keep talking about, where after the GFC, the gold to silver ratio fell from 80 to 35. Now, it didn't spend too much time down at 35. But this next crash that we're looking at, we're not looking at the global financial crisis. We're looking at the Great Depression as a precedent, because it's not just the 20-year land cycle that's ending, it's the 80-year cycle that's ending. So it's the fourth 20-year land cycle in a larger cycle that's ending. And the last one was the Great Depression. So that really is the precedent. Now, whether that happens in 2026 or 2028, that's a $37 trillion question, but it'll probably have something to do with the US bond markets or Again, what causes it is yet to be seen. Everyone's got their view on what it might be, but a combination of AI and exploding government debt might have a part to play in it. The point is that gold and silver pull back very, very briefly and then go on strong runs. Stock markets and land markets take years to recover, and a lot of things collapse and never come back. So gold and silver provide that uncorrelated hedge where you're safe from a total collapse of a bank or a hedge fund, but you're also benefiting, you're getting that shelter from the storm where if you are reaching that retirement age, it is just so risky to have everything in land and stocks, which is what most people have. And that greed and that complacency and over leveraging is very characteristic of these final years, and you can see it everywhere. So yeah, they having a little bit in both is good. And then if you really want to get very very specific with it, the gold to silver ratio spikes during the crash and then falls off the cliff after the crash. So you might not have the opportunity to be that nimble, but that's generally how these assets move during these periods.
Cass, you also mentioned before that we bring this chart up, and I will get your take on this, because the biggest question or the biggest pushback that we usually get, and you would probably get the same from people who are not in the space and aren't really familiar with gold and silver, is they go, well, it doesn't yield anything. And you mentioned this before. You said if you looked at gold relative to the share market, the typical 60-40 model portfolio, when I say the share market, including dividends reinvested, right? When you look at the property market, including rental returns, although you have to think about all those taxes and everything else you pay with property, but really, gold is the number one there by a long way. Silver is number two. Cash is terrible. Like it just, that argument doesn't hold any weight.
Yeah, no, absolutely. And I myself was astounded when I saw this. When Ainslie first put this up on screen at one of the very first, I think it was one of the My Place seminars we did, and I saw that and just went, wow. As a real estate agent, property advisor that had been promoting property for 20 years, and don't get me wrong, I loved property, and I had a large portfolio, and then you've got tenants and you've got everything that goes wrong in a property, tenants damaging things breaking down, constant calls from the real estate agent, oh, your tenant's done this, your tenant's done that. Now to have no property and have it all in gold and silver, I have no stress, I have no worries. I just, every now and then I log on and check the price and go, oh yeah, that's good. And that's it. So I can't believe after all this time that I've now realised what a wonderful investment gold and silver are. And then, as I've said with the share market, I've shared my views on that. I won't hammer on about that, but the same thing with the share market. I have clients who say to me, but yes, I need the return, I need the dividends. And I say, yeah, well, the dividends are all just one good thing. And yes, they're giving you an income stream. But will that matter when you lose 50 to 80% of your portfolio in a matter of...
That's the thing. And I don't think people grasp this. It is a penny dropping moment where, like you said, where you look at it and go, well, hang on a second. Do you care about that dividend if it still is underperforming? It's so powerful. It's so important.
And the risk is that you could lose everything in the matter of weeks. And so I just try and explain to clients that, in effect, what I say is gold and silver does have a return, because all you need to do is every 3 months go to Ainslie and cash some of that gain that you've made in, and then you've got your income stream.
Yeah.
Also, this chart includes rental returns, so this is including yields, and it's still outperformed.
Absolutely. But what people see is that, but it doesn't deposit money into my bank account every quarter, so therefore I can't use it. Yes, you can. You just go to Ainslie and you sell some. Yeah. And you use that gain as your dividend.
It's that little psychological trick you've got to make. Yeah. It's a tough one. I'll keep moving forward on some of these because I do want to dig a little bit more specifically into super in a second. But we bring this chart up a lot, and Katrina, I'll sort of get your perspective. This is where, you look at the little Bitcoin one, and I said we won't really dwell on that because it's tiny, but you look at gold up in the top corner there. It's a little tiny box, 22 trillion. Arts, cars, and collectibles always blows my mind that it's bigger than the gold market. Like, the chart's kind of irrelevant. I mean, we would say certainly the bond market is of a concern, that 318, the big grey one that's sort of there. You go, well, that there's some real risk there because that's government debt effectively, and there's lots of issues around that.
Yeah.
But when you really look at just how small the gold market is, if we continue to see central banks buying it up, if we continue to see interest, like when you look at it visually like that, there's not a lot. There's not a lot of market to absorb a lot of other money, as Drew said, currency, because it's not really money, but currency of the rest of that system trying to find its way in. There's a lot of potential there.
That's right, and the price is just going to keep moving up.
Because that's all it can do.
That's right. Yeah, I really love when we put this slide up because it shows visually, really, what would happen if and what will happen, just as more governments, central banks, and then you've got obviously all your retail investors buying as well. The price is just going to continue moving upwards. You can't really move much more from there. So definitely a price movement in the upward direction we will definitely see.
And just to touch upon the blue and the grey boxes in here, they're both really, I think, important to just quickly mention. You know, we see for the blue box, which is equities or stocks, we see phases of significant capital rotation out of things like the NASDAQ and the S&P into gold and silver. These are cyclical as well. And generally, you know, from a technical perspective, when the stochastic RSI on the 12-month chart, the S&P is resetting from, you know, overbought to oversold. You do see extended phases on the S&P where the S&P essentially chops sideways and gold does phenomenally well during these phases. Now, we are in that phase now. We are entering that phase now. So we are expecting a prolonged sideways chop for stock markets, while gold and silver outperform from a technical standpoint. And if you can measure these markets against gold as well. So you can price the NASDAQ in gold, you can price the S&P in gold, and you can see strong technical breakouts in these asset classes where they've broken out from significant downtrends, moving into uptrends now, and you know the cycle's sort of moving in the other direction. The tide is turning. So there is a great capital rotation in progress just from equities to gold. But the real significant one is the grey box, because central banks specifically are moving away from US government debt as a safe haven collateral. They have been doing so for a while, and it's really accelerated since 2022, since the Eastern European invasion. The US weaponized the SWIFT system against Russia, and you know the world sort of took note and said, well, if we want geopolitical sovereignty, we cannot rely on US government debt or the global reserve currency effectively as a safe haven asset. We need to diversify, and they've been diversifying in favor of gold. So that gray box, which is significant, moving into gold has been happening since 2022 significantly. So they're moving into gold at 5 times their usual pace, which is what, you know, as Cash mentioned, that it's really been driven by central banks, this recent bull run, in many ways. That is only going to accelerate. That's not stopping anytime soon, while they're actively, continuing to issue more debt as well. So this capital rotation into gold is, I don't think we've really seen anything yet. And it's going to be the sovereign debt markets, I think, that play a big part in all of this.
Yeah, and we do dig into that in quite a bit of detail. I'll actually do this out of order, but I'll sort of flip here. This Ainslie Research .com, you can go there. It will take you to the Ainslie Wealth page, but there's a research subsection. We talk about all this stuff. Katrina and I, Drew and I, we all get on there and have lots of discussions. So you can also follow it on YouTube where you're watching that channel. Where we do put a lot of information 100%. Out. We are very focused on the education aspect of this. So certainly if you've got questions to dig more into that, you can. And it is something that we spend a lot of time on. I just mentioned briefly, it's on the Ainslie Wealth site. We do have the fund that we've launched this year, which looks at Bitcoin and bullion. It's for wholesale investors only, so it's not necessarily for everyone. But if that's something that interests you, that you are wanting someone to manage your finance and you are a wholesale investor sort of sitting in that high net worth sort of category and want to reach out, certainly reach out and we can talk to you about that. Drew would be more than happy to talk to you about that in particular. Look, I did say, and I'm conscious of time, so we'll do this as quickly as possible, but I wanted to spend a little bit more on self-managed super funds. I said before, for me, the penny drop moment was, I can hold it, right? This can be my super. I can be holding it in my hand. I can't do that normally with any other asset, right? I can't have it with me in my possession, and that is Massive,
Game-changing.
massive. Cass, you've sort of, you talk about some advantages here to self-managed super funds. I think it's really important to quickly go over some of them to just highlight from your perspective why I was skeptical, right? Like I think I've said this to you before. I was sort of like, I actually started self-managed super fund, thought it was a great idea, and it's a bit complicated. I wasn't doing the physical, I was just doing it, investing it in funds effectively. So I didn't have that. And then the penny dropped for me and I went, hang on, what? This is my super, I can take it with me, I can have it in my safe at home, all those sorts of things that you talked about before.
Yeah.
And now I'm just the biggest advocate for these. So talk us through.
So as I've said, I've been involved in self-managed super funds for over 27 years. And previously, my involvement with self-managed super funds was more clients who didn't trust the superannuation system and didn't trust the share market, but loved property. So for the last 20 years, a lot of my clients were, well, most of my clients were investing in property. And the penny's dropped lately and people are getting out of property and getting into gold and silver. But the number one advantage that I've been saying about self-managed super funds for 27 years is that you have control. So whatever it is that you want to invest in, be it property, be it gold, silver, Bitcoin, you get to control what you invest in. Whereas what people normally think of as superannuation is that their money just goes off out of their pay into a super fund. It's basically they get a report once a year to say, here's your balance and here's your return. And they don't even think about it. They just put it away in the filing cabinet thinking, oh, well, that doesn't matter. That's not really my money. It is your money. Your superannuation is your money and you should be looking after it. So the benefits of the control, you get to control it. You get to choose where you invest. People, the number one misnomer about SMSF is that the fees are too high. That is an absolute misnomer, and I can explain that to almost everybody that I see because they might have, I'll give you a quick example. Someone's got 500,000, $500,000 in one of the super funds, Rest, Host, Australian Super. I'm not going to pick on anyone, just one of them. They say to me, no, the fees of an SMSF are too much because it's about $3,500 a year to run. When I explain to them that the super fund that they're in is charging them a minimum of 1%, more likely 1.5% to 2%, so their fees on their $500,000 are $5,000 to $10,000. They just don't see it because the super fund doesn't disclose it. It's hidden in a whole level of fees in the PDF, the 200-page product disclosure statement that nobody reads. And if you try to read, you can't because it just doesn't make any sense. They don't disclose their fees. So when people realise they've got $500,000, they're paying potentially $10,000 to their existing super fund. Even more if they've got a financial planner. They're probably paying $15,000 a year to a financial in total if they've got a financial planner. Whereas they could put it all in self-managed super fund, pay $3,500 a year, and choose their own investments. Then the penny starts dropping. So, and the next benefit is family. I have a lot of clients who have mum and dad. That's the most common SMSF. But some people put their adult children in there. And the benefit of that is the adult children immediately get exposed to the truth that super is their own money. And they can also get a bit of an education in, oh, okay, you can invest in this, you can invest in that. And it's a way of building a family, bonding around educating about taking control of your financial situation. Last benefit there is leverage, which is, as I said previously, a lot of my clients were borrowing to buy property. Some clients are still doing that, which just means you can take your small super balance, borrow to buy a property and maximise your gains through the leverage. So SMSFs, it's all pros. And I have been saying that for 27 years. People say to me, what's the con? There isn't one. Yes, it's complicated, but that's why you pay someone like Freedom Financial Solutions to do all the paperwork and all the complexity for you. You are required to make your own decisions. That's probably the only con, but is that really a con that you have to
That's
make
the whole point. That's it. Particularly when you hear some of this stuff tonight, you know, you go, well, that's where you don't want to be trapped.
That's the whole point. And some people say, well, I can't cope with that. It's too confusing. It's like, no, we've taken little old ladies who have got very little IT skills, very little skills in investing, and they're overwhelmed and they're like, oh my God. And we've just shown them, look, we do all this for you. You need to sign these pieces of paper. and then you contact Ainslie Bullion and they'll issue you an invoice and you pay them, and then you just sit back. And they go, oh, wow, that's pretty easy. And then the setup stage and the first year is a little bit, oh my God, what's happening? But after that, I've got, as I said, 27 years in the industry. I've got clients that have been in SMSF for 27 years and they just love it because it's just so simple. They get their annual report, their investments are growing. There's really nothing that they need to do. So it's all pros. And another tip is that a lot of accountants don't do SMSF. So you might go to an accountant and they will say, oh, no, don't do it. It's too complicated. It's too expensive. That's just because your accountant doesn't do it and they don't want to do it. So go to an accountant that specialises in it, like us. Another tip is that the financial planner will tell you, oh, it's too costly, too expensive. The reason they are saying that is that they get all their commissions from putting you in the share market. They don't want you in SMSF and to buy gold and silver because they lose you as a client and they lose their money. If you are paying a financial planner, let's just say $3,500 a year. That's not too much, I guess. You are a saleable product to them at 3 times that rate. So you are a saleable product at around $10,000. So if they want to sell their practice, sell their book, as a lot of financial planners do. That's why they don't want you to leave. They don't want you to set up an SMSF because they don't want to lose that $10,000. Yeah, I'm a bit negative on the financial planning industry, but I'm allowed to be because I was one for 20 years. So yeah, come and see us at Freedom Financial Solutions. No doubt the contact details will be put up on screen towards the end.
Yeah, we'll do that very soon. Look, as I said, I was conscious of time, and we are at that time. I want to sort of wrap it up, but I'll very quickly sort of speed run through a few last points, and I want to address the last few questions and wrap up. So we won't be much longer, but I do want to make sure we've covered everything. Cass has already highlighted, look, really speak to them. It's not that complicated when you've got someone who knows what they're doing helping you through that process. So I won't dwell on that. We did talk before about storage options. There's lots of different ways you can store it. I think we have addressed this. If you have specific questions, probably the best way to deal with that is to contact us, and we'll put that up at the end, have a bit of a conversation.
Most definitely. Give us a call. Email is great because you can just put all your questions down.
And email, fantastic. We have the team there to be able to answer them and get back to you. But we probably have covered a lot of these. One I just wanted to briefly spend a little bit, just maybe 1 minute on, if that is the Ainslie Saver process. Because there was a question here as well about redeeming from Saver. I'm a member of no, sorry, that was the question about Gold Silver, which we answered. It was, what about Ainslie Saver? Can that also be collected as bullion bars?
Yes, most definitely. You can redeem your Ainslie Saver. With the Ainslie Saver, though, just keep in mind there's a $250 redemption fee, and that just covers the admin of us in the background. With the Ainslie Saver, you can redeem your full amount, you can add to the amount, so you've got a couple of different options, or you can cash it out at any time. So just keep in mind it's a minimum of $50, and it's a great product. Yeah,
and that redemption, that you don't have to redeem it, you can take cash like that. That's only if you want the bars.
That's right, you can take cash, or you can just leave it in there. I've had a lot of clients this year just leave it in there and let it accrue. So.
And we do have the vaulting services, the Melbourne Vault, Reserve Vault. We didn't really dig into tonight, but we certainly can. We have facilities for you to be able to store that with the third party.
Great vaults, third party vaults, very high security, and you can have your own locker specifically with them. So I highly suggest them as well.
Okay, so I'm going to address just a couple of questions here, and then I'll get the wrap up from the Ainslie side, from the Freedom Financial side, just probably final point that they want to that everyone wants to make. But the question here, would it be worthwhile selling our gold to buy silver? I mean, I think Drew has answered that in a bit of detail on, like he would say yes, but depends. Like it depends on your situation, and he did give a few examples there, so I think we've probably answered that one. Is property in a bubble, would it be worthwhile selling the property to buy silver? Again, that's a bold statement to make, but I would suggest maybe following along on that Ainslie research to get a little bit more deep.
Oh, I think we've lost him. All right, well, perfect, because I wanted to step in and talk about property. um, I'm sure they'll be back in a second. They'll just be working out their connection there.
Yeah.
I will just say about property and selling it for gold and silver. With property, I think coming into this final stage of the cycle, it all just comes down to leverage, right? Because property is such a long-term investment. You can ride out multiple cycles and without worrying about timing them. If it's a home that you're living in, of course, you're not going to sell it. If it's an investment property and you've got good gains on it, well, you might want to hold it for another 10, 20 years. I don't know why, you would necessarily want to sell it if you're going to be getting that yield, and it's a bulletproof yield, like a recession-proof rental property anyway. You might just hold it over multiple cycles. It all comes down to not being over leveraged in this final phase. If you've got too much debt on property, if you've got too many investment properties, then at that stage, reducing your leverage and your exposure to market volatility makes sense. So, taking some off the table and diversifying into metals makes sense. But just, if you've got one home and an investment property, just selling all for gold and silver, you know, I can't, necessarily say that that's something that would work for everyone. It might work for some people, but it's one of those things where you've just got to see your overall situation, and it's about being diversified quite effectively. Now, I think we can start to wrap this one up here. Let me just bring up the chat and see if there's any more questions on this that are very
I can
pressing.
also just comment on property a little bit. As I said, I've been a property advisor and real estate agent for 20 years. And previously, all of my clients were getting into property. And more recently, what we've seen is a sell-off of the property and head towards precious metals. And some of the things that are driving that are the increases in the rates, the land taxes, and insurances, everything that's going on with property. And particularly, I know where you're broadcasting from, or at least the others are broadcasting from Melbourne, where I have spoken to clients this week where the land tax, one client was just $60,000 land tax bill on one property.
That's right.
And
Yeah.
he's selling it because it's just ridiculous. He can't keep up with it. So that's the problem with property now, is that it's sort of out of your hands. The government can just increase the rates whenever they choose to. In Queensland, we have had a introduction of a view tax, where you get a tax if you've got a view out your window. So yeah, so a lot of people are ditching property because of that. It just seems to be no longer in your control. You've got as I said, the rates, the taxes, the insurances, which are going up and up and up because of all the natural disasters. And then, of course, you've got the interest rates, where the government is deciding to put them up again because the economy is in trouble. So therefore, we need to put up the interest rates. I mean, we could have a whole discussion on that whole topic in itself, but it literally makes no sense when Australians are already struggling. Just let's put up interest rates.
That's right.
So a lot of people, and people can come and book in with me, Freedom Financial Solutions. Our website is Freedom FFS, so Freedom for Fred's sake, Freedom FFS. You can book in with me and chat about your portfolio and property, gold and silver, things like that. I can't give advice, but I can certainly give you a lot of my opinions, and my opinions are based on 30 years of experience in the industries across all these topics. So.
Absolutely. And it looks like we've answered most of these questions. I will just touch upon Motortronics. Would it be worthwhile selling gold to buy silver? Personally, I feel like gold is the final destination. I don't generally recommend selling gold for anything, except for, maybe, funding a lifestyle or something like that. People do swap gold for silver when the GSR is very high. So if you're looking at, again, multi-decade time frame, yes, swapping something for silver, swapping really anything for silver when the GSR is this high, and then swapping back out from silver once the gold to silver ratio falls is an option. But gold does tend to be the final destination. And I think the last one here is for you, Cass. Can our 23-year-old son purchase silver using his super he received from his employer? He doesn't have an SMSF. I guess it would be, give Cass a call, because you would need an SMSF.
No, you can't do that. You can only do gold and silver in an SMSF. He might be able to do, like, if you have an SMSF, if you have enough super, you can set up an SMSF, and your children with small balances can join it, and then that's a way that they can get into gold and silver market.
Beautiful, guys. Well, thanks so much for joining us. Any final questions? You've got 10 seconds, but I think we'll start wrapping this one up. We do this once every 3 months, so it's a quarterly thing. And if there's any questions that you think of later, please email us, get in touch with Freedom Financial Solution for all your super fund needs. You can come visit Ainslie in store as well. We'll have one of our great sales consultants sit down with you in an office. You can share any information or any questions you have with them. It's no obligation, so you don't even need to necessarily purchase anything if you're not sure at the time. But you can send us an email, you give us a phone call, or come in store, and we're more than happy to answer any questions. And that's all from my end. If there's any final words from your end, Cass, we'll start wrapping this up.
Yeah, no, I'm all good. Just look forward to helping you all out.
Thanks, guys. Have a lovely Christmas, and we will chat to you next year.
Yeah.